Good morning, everyone. My name is Ekaterina. I'm here with Doug, and we'll help you to make money in the stock market with information you cannot find anywhere else.
Good morning, young lady.
Good morning.
Hey, we have Superman. This guy they know on Wall Street. They call him Superman. It's Rich Gordon
Yeah,
from Wachovia.
Mr. Rich Gordon, the Chief Fixed Income Market Strategist for Wachovia Securities, talks about the increased stagflationary pressures. Let's see what we have to say.
A number of important things happened in the financial markets over the course of the past week. First, the payrolls and unemployment numbers showed a U.S. economy that's probably in recession right now. May saw a jobs loss of 49,000. In the first 5 months of 2008, 324,000 jobs have been lost, which compares to 450,000 jobs gained during the same period in 2007. Also, the unemployment rate jumped from 5% to 5.5%, the largest increase in more than 20 years. Part of the reason for the sharp rise was that a lot of young people under the age of 25 came into the workforce and weren't absorbed. The sharp spike and scarcity of entry-level jobs available highlights the reluctance of corporate CEOs and CFOs to expand payrolls and make investments. Instead, they're downsizing in an effort to maintain profits. The second thing is that earlier last week, Trichet said that the ECB might be raising rates next month to fight the increase in inflationary pressures. The ECB's only mandate is to fight inflation, so it has more flexibility right now than the Fed, which is supposed to regulate both inflation and growth. Oil prices surged again, up by $12 a barrel since the comments were made. Third, S&P announced downgrades from AAA to AA for the insurance arms of MBIA and AMBAC, with a negative outlook for both. It means more write-offs for financials. If the bond insurance companies continue a negative ratings migration, it would mean more forced selling from high-grade investors like insurance companies and state funds. A lot of them are either unwilling or unable to hold securities whose ratings become cuspy or below investment grade. Also, as the ratings are reduced on their holdings, banks and insurance companies are required to hold more capital against the positions, further straining their balance sheet capacities. Also on Monday, Lehman announced a $2.8 billion second quarter loss and said that they would seek an additional $6 billion through sales of common and preferred shares. In response to all this news, credit-related markets traded wider almost across the board. Treasury bonds were unable to hold on to the gains of the previous week after comments by the New York Fed president that tighter monetary policy might be necessary globally in order for inflationary pressures to be reined in. Stocks have trended lower, led again by the financial sector. The S&P appears to have broken through support at 1375 and could test the next support level at 1325 early this summer. The S&P Diversified Financials Index is down 23% since the beginning of 2008 and over 40% during the past 12 months. IGCDS 10 widened by 14 basis points compared to only 4 on the cash index, which further narrowed the negative basis. 10-year AAA CMBS spreads widened by 13 basis points. But given that there's only one CMBS deal currently in the forward pipeline for the rest of this year, periods of sharp widening could present good entry points for patient investors. The tight supply in CMBS contrasts with the corporate sector. Corporate supply will probably be robust for the rest of this year as corporations turn to the public markets to make up for much tighter bank lending standards. For me, all of this suggests that this summer's trends will be the ones that have become painfully familiar to dollar-denominated investors. First, commodity prices trending higher as the combination of a weak dollar and fundamental global demand for resources maintains upward price pressure despite slowing GDP growth in US and Europe. Second, widening pressure on credit spreads. We probably won't reach the widest level seen on the spread sectors, but the stars are aligning for a difficult summer for spread products overall. Third, a consolidating to slightly lower stock market. The combination of further write-downs on financials, slowing economic growth, and deteriorations in the credit quality and capacity of consumers should keep stocks from gaining upward traction. Finally, some uncertainty as to policy direction going forward in the U.S. as the presidential election campaign gets into full swing. The candidates have substantial differences in their approaches to both domestic and foreign policy, and I would expect portfolio managers to make adjustments as polls set and reset the election's odds over the course of the summer.
Hey, boy, Rich Gordon's always right, and he's talking about stagflation. It's chaos in the market today, man. Futures were up this morning. Now the Dow's down 165. I'm getting killed. You can watch my ultimate demise free on Covester. Maybe we'll bring Perry in later, and he can laugh at me. We've got oodles and oodles and oodles of CEOs.
I never heard this word oodles before mentioned.
Yeah.
What does that mean?
Official
like
word.
A lot?
Lots.
Oodles.
Yeah.
Less than Google's.
Less than Google's, the German says. German, there are rules with the German. Aren't there, Mike? We've got Needham, 7th Annual Biotech and Medical Technology Conference, RBC Global Mining and Materials, Toronto, Raymond James, Infrastructure. I'm telling her. What do you want me to do? Let me tell you something, Mr. and Mrs. Audience out there. I have two options when I'm here. I can look this way towards you at the camera, but then I see German Mike, or I can look at Ekaterina.
Oh,
now,
what
am I going to choose? What am I going to choose? Yeah, German Mike, I'm choosing you. I love you very much, right? And it was nice to be a good time coming in, playing with the Ether all stuff Sunday, but I'm choosing her. Okay?
Okay.
So from now on, we're going to televise my ear.
Televise your ear.
Yes, because I'm going to be looking at you. We've got different people in different places in Toronto today. Raymond James, 2008 Infrastructure and Construction Conference. We'll have notes for you throughout the day. Also, the RBC Global Mining and Materials Conference. German, they've got potash companies up there too. Yeah, I know. German Mike jumped in and out of one. And you pulled a Doug. It keeps going up, 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 up. You know, and he's out of it. And we've got On out in San Francisco for the Roth software one. Oh, I love On. I saw him yesterday. He got a motorcycle. He's a French guy. He's very nice, but he's very dramatic. And what else do we have? We had Infineon this morning, which you guys can see if you're an Infineon trader. We did them from the 21 Club. Super cool. Do you know 21 Club?
No.
Famous one. And you can see that one, wsw.com/webcast/cc/IFX and the number 2. And that was their second quarter fiscal year 2008 quarterly update. Do you know those guys, Mike, or you don't know all the Germans? And anyhow, so we'll be back with oodles of stuff later. You're going to come back and visit us later and help out, right?
I'll be back here. I'll be back here in a few hours.
Beautiful.
We're here every day at Wall Street Media. You can find us directly at wsmco.com. Thank you.
Do you know what? Before we cut, click the feedback button and tell us what you're buying right now. I'm getting slaughtered, actually, at the moment. So I obviously don't know what to buy. Click the feedback. Tell me what you're buying. Tell me what's working. Say hi to mommy.
Again?
Yeah.
Мамочка, привет. Я тебя очень люблю.
Thanks, guys.
Bye. Thank you.